The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 31st. Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I do mean more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading of that email, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on New Year's Eve, Magical Monday. Everybody getting ready for a celebration. So let's go check on the celebration of these markets. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 220 points. That's about 1% to the upside. S&P's up 0.7%. That's up 16 points. Trade now to 25.02. So we're green to the upside across the board. Spot volatility index is off 7%. Trading down $2 at 26.28. Gold is flat in essence. Trading now to 12.83. Silver up 12 cents. That's up 0.8%. You've got light sweet crude flat. Natural gas taking it on the chin here today. Bonds are moving higher. Amazon leading the charge the upside, up 41 bucks and change. Booking Holdings up 17. Netflix up 12. Regeneron Pharmaceuticals up about 10 to the downside. It is Tesla up 8 bucks, nearly 2.5%. Tilray is down $4. NF Energy is down 28%. That's a stinger on New Year's Eve. Of course, I want to look at what you want to look at. We do have our first question that came in. This was from Larry T. Larry T writes in, he says, Steve, is this a counter trend bounce? If so, do you have a price target for the spot volatility index? He says, I don't care what Pesavento says about you. You're the best. Hey, I know what that LP says about me. You're just pulling my leg. This is from Minnesota. So stay warm. Well, you can't stay warm when you're in Minnesota other than by stay. I know how you stay warm when you're in Minnesota. Come on down. Hey, who used to say that? There's that, what's the game show? Come on down. Hey, let's just go answer Larry's question. Let's just stay on track right here. And his question, the first part of the question is this just a counter trend rally? So how are we going to answer that question? I think the way for us to answer that question is by taking a look at not just one thing, Curly, but multiple things out there to help us decide, is this just a counter trend rally? The first thing that I would think that you and I would want to take a look at would be the good old consolidation area. Let me do this here. Let me turn a few of these studies on and off. That way we just start with a clean chart out here. We'll see if I can do that. Of course, Stevie can do pretty much anything. Kind of amazing out here. At least I amaze myself each and every day. And so good. We're down to just a couple of lines out here. We just really want to, oops, that's the line we wanted to keep on here. And we'll leave the other stuff out here. So Larry, the very first thing that you and I want to be focused on and paying attention to is what we call the good old consolidation. And that is the consolidation pattern of the Dow. The Dow is the one that has a very distinct consolidation, meaning that it topped out. And what I mean by that is if I put this on a monthly, we get rid of some of the noise, it's actually much easier to look at. And what I mean by that is I'll just simply draw a line across the top out here, and we'll see that price was contained this year in 2018 within the high of January of 2018. So there was a test in September, there was a test in October, couldn't bust them to the upside. We had already had the test to the downside. There was low in February. There was a retest of that in April. So we already had the makings of a consolidation. What we're seeing today in price, we are seeing price try to get back into that consolidation. Now, when you break through these patterns out here, let's go back to the daily time frame chart. Here you'll be able to take a real close-up of where we're at. The price action on Friday, the price action of today is going to make you say, something to think about. And what am I talking about? Well, we already have a failure of price inside the Dow. We're looking at the cash indice being able to get back inside the consolidation. Does that mean sell? Not necessarily, because we also haven't seen a breakdown of support. We can take a look at what those levels are as well. But the answer to your question, this one here, Larry, would say leaning towards a counter trend rally. Still not necessarily enough proof. Now, what happens if price today closes above 23,360? You're at 23,290. It could do that in a heartbeat. That's another 90 points from where, in essence, that's another, no, not 90 points, another 70 points, in essence, from where we're trading at about right now. If it does close back inside there, one interpretation, especially on a monthly basis, it was a false break to the downside. And then that would say, well, maybe not so fast. However, what you and I like to do is decorate our charts out here. We like to take, we're just Picasso or Rembrandt or maybe, because I'm a little bit wacky, it could be that Salvador Dali guy. So, but you take your pick of the artist. But let's just take a look at a descending trend set of lines inside of the Dow. All we have to do is take the high that formed out here on October 3rd. Go ahead and just match that with the high on November 8th. Now, the tool that I use, once it gets that line, it draws a parallel line in whichever direction I want to go. And I just simply have attached that parallel line to the low in October on the 29th. It's a daily time frame chart. So price is actually back inside that price channel line. So now it's caught in between one level of support, the bottom of that channel, and the resistance, meaning the consolidation, meaning it's not making it easy for you and I. It's just not. So what do we do next? What do we do next? You know, one of the things that we can do is, and I can't do this for the Dow, but I can do this for the NASDAQ 100. I can do this for the S&P 500 out here, is go take a look at its market breadth. So, Larry, before we go to this breakout here, and I know I'm just kind of dragging this on here, but let's take a look at the S&P 500 market breadth. And what we're going to see right now is it has not crossed bullish, meaning we would see the green line above the red line, meaning we'd see more issues trading above the top of their profile than the bottom. Above, 48. Below, 85. The edge right now, we'll come back further, take a look at it, but the edge right now has got to go to the counter trend rally theory. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're trying to answer the question for Larry in Minnesota. Is this just a counter trend rally or not? And here's what I think we have at this stage here. Here's what we have learned. The answer is yes, we're in a counter trend rally. The question is, when is that counter trend rally going to stop? We know that the Dow is up at resistance. It's trading between resistance and support. I believe for the last couple of days here, the market, the indices, the equity futures contracts have been trading between resistance and support. And therefore, there is no clear, definitive answer. And so the only answer really is, yeah, this is a counter trend rally. It could turn into something more than that. You were specifically asking about the spot volatility index. Now, that is at the bottom portion of our screen. Now, on the top portion of our screen, we can see where the spot volatility index is trading, 26.19, down $2.15 or 7.5% today. You can also see all of the all of its futures contracts taking you out to September of next year. Now, you'll notice that September of next year, which has a 10-minute delay on it, is priced at $20.37, whereas the spot volatility index is 26.19. The spot volatility index is above all of the futures contracts. It is still telling us that there is jitterbugness, just a word we made up here. There is still some short-term, very short-term concerns that are out there. Duh, you didn't need me to tell you that. But that's what this means. The question that was posed is, where's that spot volatility index going to? Well, the first target was hit today. The first target is the red line, if you're looking at the bottom of my screen. That is the Bollinger Band setting, specifically for the spot volatility index, setting at a 50 to 1 standard deviation versus the 20 to 1, which is kind of the normal out here. This is the new normal. No, it's not the new normal. But prices hit your first objective. if you're asking where it's going to. 26.11. You're trading at 26.21 right now. If price can close below 26.11, odds favor that price will get down to the 50-day exponential moving average, 22.38, where it could very easily find support. But I would have to say the spot volatility index is right at support level number 1, right at a time where we don't have positive market breadth on the S&P. I didn't pull over the index 100, but we do not have positive market breadth there. We do, however, or we did a while back, have it inside the New York Stock Exchange. So we got a lot of conflict going here. We just do. I'm just going to give it to you the way that it is. I'll dole it out, and then you figure out what to do with it. But if we take a look at the New York Stock Exchange, you will see that its advanced decline oscillator reading, as we speak at 1:21 in the afternoon, is above zero. It's trading at 39 and change out here. Closing above zero is the first indication that the counter trend rally would advance further. However, the caveat here, the proper use of this tool is day one above zero don't mean a thing unless it's got that swing. And the only way it's going to get that swing is follow through to the upside and not close back below it being zero come Wednesday. If it doesn't close above zero today, it's just going to join the market breadth calculator or calculations inside the NDX 100 and the S&P 500 out there. Now look, the New York Stock Exchange had gotten to the extreme oversold reading. This is only the daily time frame that I'm showing you. I'm not going to pull out the weekly only because I'd have to go pull it out and pull, But what I can share with you is that it was the lowest reading. But when I say what do you mean? The advanced decline calculation oscillator is taking a look at the advanced and declining issues, looking at the spread between the 19 and the 39 period exponential moving averages. So that could be the 19 and 39 weekly or the 19 and 39 daily. Here we're looking at daily. So there had to be, it's like taking a ball, jumping in the pool in the backyard, trying to hold that ball under. Eventually, the ball's going to win. It's going to bounce up out of the air, but that does not necessarily mean that it's not just a counter-trend rally. So you've got information on both sides saying just really not so fast out there. If you're in a trade, and you're in a trade that is short volatility, I think you stay in that trade, recognizing, let's go back to the spot volatility index out here, recognizing that you're up against level 1 support. If you got into it today as the example, well, then maybe you just go ahead and you take those profits, you go celebrate, you ring the bell, you say, hey, that's a great way to end New Year's. If you were short going back 3 days ago, different story out here. But it is up against an area of support. So just be careful out there. If you're short the market, what do? Boy, I think you can stay put. And you can stay put before it goes kaput until you start to see market breadth crossovers, until you start to see price close above, in the case of the Dow, above the bottom of its consolidation. But then you'll want to know where the other levels of resistance are. One of the things that you can do, here's the upside potential inside of the markets, and you'll want to take a look at those with regard to the equity futures contracts, and that is this. If we take a look at the ES, the NQ, the Dow, and the Russell 2000, those are the four on your screen right now. In the case of the ES, by the way, the thing that's really important for you to, I think, for you to take a look at and understand is just know that the highs of Friday have not been taken out. They've not been taken out in the equity futures contracts. They've not been taken out in the S&P, in the Dow, in the NASDAQ. So I know things look rosy or Rhodesy, whichever one you prefer, with the Dow being up 248 points, but you have to put things in perspective. No new high today. So, and now I don't know if we're going to get one or not. If we were going to get one, then that would say that the Dow equity futures contract ought to go up and test 23,674. The center of control, the center of the box, the point of control, where both buyers and sellers are hanging out, is right here. 24,357. I don't know if price is going to get up above that. It can. It can go ahead and explore the top of that box, 23,674. And when it gets up there, that's where the real sellers if this is only a counter trend rally, should be lined up, Larry. 23,674. If buyers are able to overrun them at that stage, that would bode well because the structure of that profile is bearish in nature. In nature because the center is much closer to the top than it is to the bottom out there. So, is it a counter trend rally? The answer has to be yes. Can it turn into something more? Only when resistance begins to fail. And I think in looking at the equity futures contract, it's either one or the other, or both, the Dow or the ES Mini that gives you that piece of information. And that is at the top of their profiles. By the way, in the ES Mini, it's 25.85. So I hope the secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Good, sound is back. So let's just simply go where we were back and answering the question for Larry. If this is a repeat, my apology. The answer is, or the question was, is this a counter trend rally? And at this stage of the game, it is a counter trend rally. That does not mean that it's over, but it is up against resistance. So be careful. We've got the spot volatility trading into support, which is the upper boundary line of its 50-to-1 Bollinger Band. You'll see that on my screen. That level is 2611. Close closes below that suggests, okay, 2239 would be the target. You would simultaneously, or you should simultaneously, see the Dow closing back above its consolidation bottom, 23,360.29 to be specific. If it doesn't close above that, then price right now is just simply trading in between support and resistance out there. Let's go to my next question that came in. Let me see if I can find that. Now they have one set of charts up at the moment. Oh, we're going to break here. So hopefully by the time we're back from break, I'll have everything back up and running. This is Steve Rhodes with TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So look, let's get to our second question here, coming in from Eddie. In essence, Eddie sent in 2 email questions. Eddie, I'm going to go to the last one right here, which is that Eddie says, I'm long the Qs by a put spread that expires Friday. Do I think the Qs will stay above 148 until then? And here in essence is what you are up against when we take a look at the QQQ series ETF. First of all, if we take a look at its market breadth out here, in other words, number of stocks that are trading above the top of their profile, that would be bullish. That is that's 11. So there's 11 stocks trading above the top. There are 18 trading below the bottom. That's why you don't see a bullish crossover here, meaning the green line crossing over the red line. So the majority of stocks inside the NDX 100 are trading within a range, a neutral range, between the top and the bottom of the box out there. It is really the exact same story of the message of the markets when we take a look at trend lines, we take a look at oscillator and change line, which, by the way, for the QQQ series ETF specifically is 152.08. The trend line, the oscillator and change line, Stevie's red line is red. So dipping back below that 152.08 would not be a bullish sign. It would be a bearish sign out there. That would say the counter trend rally is over. What else do we know about the Qs out here? So one, we know that you don't have positive market breadth. You've got a range-bound trade. And so I'm hoping that this is going to assist you in making a determination of what you're going to do today on New Year's Eve. If we look at the most recent move down from the trading day of December 3rd, to the low out here on December 24th, we can see that what's taken place has been a 0.382 retracement. 0.382 retracement was 154.86. We're trading 154.10. We have not made a new high today. Doesn't mean that it can't go on to make a new high out there, but no foul caught up into the fact that the Dow's up 200 plus points and so on and so forth out here. But what I'm getting at is levels of resistance that you would like to see haven't been pierced today. So you don't have that confirmation, confirmative answer out there. There is a trend line. If we just take a look at the Qs out here, just in essence use the same tools that you and I were looking at inside of the Dow when we looked at that. There is a trend line out here, Eddie. You probably are aware of this from October 29th. I would use that low. I would use a November 20th level out here. And price did just close above it just slightly on Friday. We tested it and rejected it earlier today. That's a positive sign. But we still are just trading within a contained range out here. I don't know how this is going to resolve itself. I can go both ways on this with regard to the bear. There are enough bear signals and enough bullish signals or counter trend rally signals. So what do you do today? What do you do today? You know, you got a nice profit? Something to think about. Can I tell you where this is going to be come Friday? I can't. I'd like to. And if you're going to stay with the trade out there, what else is it that you could use? I would say, what else is it that I can look at right now that I could put my finger on? Is there anything that I can put my finger on? And I guess for the day, here's what I would look at. Let me do this right now. Let me take this chart and redecorate it. So we're going to do a little, oh man, did I just get kicked out again? No, I don't think so. I don't think so, but let me do a little redecoration here. Let me get rid of these TAS boxes, remove those. And then what I'm going to do is I'm just going to turn these dash lines, turn them solid here. Just going to be a little bit easier to look at, I think. And I want you to focus on the red solid dash line on this 30-minute chart here for the NQ. Let me go ahead and expand upon it just so you can see what took place earlier today, which was a level of support was tested. And so I'm going to give you something to look at for today to consider. So give me a moment to do that. Let's go ahead and expand it across. You'll see it expand across out here. And it's in about the 60. Let's give you the exact price of that. Let's see if we can do that. That is, in essence, at the price point of 62.93. I would say if you see it close below 62.93 today on a 30-minute basis, the suggestion is go ahead and take your profits. If you got to close below 62.28, it would be like a lot of information saying, you know what, maybe you ought to take those profits out there. So right now you're stuck in between support and resistance. Eddie, I hope that's okay with you. Not that you're stuck there, but at least the information to assist you with your trade. And Happy New Year to you as well. We've got a caller on the line. We've got John in Michigan. John, thanks for calling. Thanks for holding. Happy New Year to you. How are you today?
I'm doing well. How are you? Happy New Year.
Thank you. Thank you very much. Visa is the stock that you want to take a look at. Tell everyone what you're doing and how I can help you.
It's just a long-term hold. And, you know, it's one of those that I have in my wife's portfolio.
Okay.
She's a blue chip gal, and she, so it's one of those things you think people are going to, with $20 trillion in federal debt, and who knows how many trillion in, personal debt that people have, you think they're always going to be using those cards.
It's better than Bitcoin, isn't it?
Yes, it is.
Yeah, so they will. So from what I can share with you on this chart here is, for all intent and purposes, Visa should have formed a nice bottom back on the 24th, 26th out here. It made the ideal pattern, which was price was moving lower, doing with less relative energy, just as it did up at the high out here on October 1st. And then that big whopper of a day, December 26th, was a really nice bullish sign for this chart. What you don't want to see Visa do is you don't really want to see it close below Stevie's red line, which is 129 and change, 129.88 out there. If it does, what it says to me, John, is just like the market, we're going to go back and retest the lows from the 26th. But this is a long-term hold. I didn't ask you where you were in. I hope it's I hope since it's your wife, it's from way back when. But if it's, go ahead.
It is way back when, yes.
Yeah. So at this stage, just like the market, I can say that the market generated across the board beautiful bottoming signals. It just did it at the wrong time. It's like if you do the right thing at the wrong time, you can get slaughtered. You know what I mean? Mm-hmm. And I don't know if that is what is going to unfold here. The reason why it's the wrong time, two reasons. One, and I don't know about this for the case of Visa, but the general market, is we are still trading below the close of last year. And if you go back over the last 100 years and you see what happens there, it says we go back and we retest these lows out here. It says you can also bust through them. Doesn't say for how long you stay down through there, but we're in this very precarious time frame where in a normal circumstance, if the market was moving higher, we would say be ready for a pullback. That's the seasonal tendency. So, John, does that help you out?
Yeah, my thought, Steve, was maybe just to,
Stay on through the break. Stay on through the break for me, if you would, and then we'll get that last thought, and we'll close out the new year with John in Michigan.
Okay.
Go Blue. What happened to them?
They got blown out.
They did. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're on the line with John in Michigan, commiserating about the Michigan Wolverines. Although maybe you're a Michigan State fan, I don't know which or neither. But
we're Michigan. We're Michigan.
They did get their butts kicked by University of Florida, so which actually worked out to my advantage because my daughter going there, and actually she drove up for the game, so she had a good time. But finish your last thought here while we have just a minute or so left.
Well, I was wondering if I should just take some profits here. Right now I wouldn't do it today because I had to pay taxes on it, but perhaps take profits and buy it back later if it's going to take a whack.
I wouldn't, so here's something to consider, and it's this chart right here. You said it's a long-term holding. This is a monthly chart for Visa, and if you've held this for a while, you would need to see it close on a monthly basis below 123.14. I'm not saying that it's not going to go back down there and test that, but if it's a long-term hold, it may not. I mean, it did what it was supposed to do. It's made a nice bottom. On a monthly chart, it came back and tested the bottom of its profile, 123.14. It has not closed below the bottom of a profile for a long time out here, at least 7 years that we're looking at, and probably longer. So I would, well, it can't be too longer because of when the IPO was. Long-term, that's not what the charts are telling me. Okay?
Okay.
Did I lose you?
Well, hey, I really appreciate your insight, and you have a great New Year.
All right, we'll do that. We'll do that. And thanks for calling. Much appreciated. And speaking of the New Year, folks out there, look, I just wanted to take just a moment and tell you how grateful I am for each of you that are out here, all of the subscribers, all the people like John, that have called in, Garo, just the whole slew of you, those folks who take the time to write and email me a question. I can tell you that in 2018, you've made Steve-O a better Steve-O. You force me to stay on our game, to give you extraordinary information is what we hope to do. And let's just all make sure that 2019 is even better than 2018. So have a happy, healthy celebration, and I look forward to seeing you on Wonderful Wednesday. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets.